Know your income tax. Difference between old and new tax regime. The tax slabs and rates differ between the regimes. Various deductions and exemptions are allowed in the old tax regime. The new tax regime offers higher relief of taxes but permits limited deductions and exemptions. Key features of the new tax regime. Eligibility. Optional. Taxpayers can choose between old and new tax regimes each year. Lower tax rate. Reduced tax rates across various income slabs. Simplified process. Filing is simplified by eliminating numerous exemptions and deductions, making tax calculation easier. Factors for opting for a tax regime. Before opting for a regime, tax liability should be calculated under both schemes and compared. Key factors. Amount of exemptions deductions available under the two regimes. The tax slab in which the total income falls. Tax rebate available under Section 87A. Calculator for assessing tax liability. A calculator is available on the Income Tax Department website. eportal.incometax.gov.in Income and Tax Calculator Advanced Tax. Select the old or new tax regime and compare tax liabilities for an informed decision. New tax regime. Standard deduction. Standard deduction of 75,000 rupees for salaried taxpayers for FY 2025-26. Health and Education Cess. Health and Education Cess on income tax shall be levied at the rate of 4% of income tax including surcharge wherever applicable. Section 87 Rebate. The rebate allowed under Section 87 has been increased to 60,000 rupees for new regime from 25,000 rupees. Tax incidence for income up to 12 lakhs rupees. For the financial year 2025-26, assessment year 2026-27, the rebate limit under the new tax regime has been increased to 12 lakhs rupees, 12,75,000.00 without standard deduction. Individuals with taxable income up to this amount are eligible for a rebate of up to 60,000 rupees or the total tax payable, whichever is lower. Tax slabs. The income tax slab rates followed for financial year 2025-26 will be as follows. Surcharges on income tax. Surcharges shall be levied at below tabulated rates of income tax. Exemptions, deductions available and not available under new tax regime is given in the table below. Impact of new tax regime on home loan benefits. A. Home loan benefits under the old tax regime remain the same as one can avail deductions without any restrictions. However, the under new tax regime benefits are curtailed. The details are as below. Deduction under Section 80C for the payment towards principal component of the home loan, stamp duty, registration charges and Section 80E. Section 80E are not available. Deduction under Section 24B for the payment towards the interest component of the home loan is not available for self-occupied property. However, deduction under Section 24B is available for let-out property. For let-out property, there is no upper limit for claiming tax exemption on interest, which means that you can claim deduction on the entire interest paid on your home loan. Deductions under house property are as below. Municipal tax. Municipal taxes are the annual amount paid to the municipal corporation of that area. Standard deduction. Standard deduction is allowed 30% of the NAV of the house. For a self-occupied house property, since the annual value is nil, the standard deduction is also zero on such a property. Deduction on interest on home loan for the property. For the rented out property, the entire interest on the home loan is allowed as deduction. Deductions under house property are as below. Old tax regime. Standard deduction. Standard deduction of 50,000 rupees for old tax regime for salaried taxpayers for financial year 2025-26. Health and Education Cess. Health and education says on income tax shall be levied at the rate of 4% of income tax including surcharge wherever applicable. Section 87 a rebate. The rebate of 12,500 rupees allowed under Section 87 has been continued under old regime. Tax incidence for income up to 5 lakhs rupees. The rebate limit under the old tax regime is 5 lakhs rupees. Individuals with taxable income up to this amount are eligible for a rebate of up to 12,500 rupees or the total tax payable, whichever is lower. Tax slabs. The income tax slab rates under the old tax regime will be as follows. Surcharges on income tax. Surcharges shall be levied at below tabulated rates of income tax. Prominent tax deduction, claiming rebate, under old tax regime at source. Section 24, B. Deduction from income from house property on interest paid on housing loan. Registration documents, possession certificate from builder. Statement of computation for income loss from house property. Initial loan sanction letter from concerned bank NGIF. Provisional certificate EMI chart amortization chart from bank NGIF. Non-claiming certificate in case loan taken jointly. If property shown as let out, lease deed required, copy of rent agreement. Form 12BB. Section 80C. Entitles an employee to deductions for the whole of amounts paid or deposited in the current financial year under the following schemes subject to a limit of 1,50,000 rupees. Current financial year premium paid receipts. ELSS infrastructure bonds. PPF. NSC. Tuition fees. Housing loan principal. PLI. 5 years term deposit schemes of bank. Army GIs. Contribution to certain pension funds. UTI schemes BULIP. Section 80 CCD. 1B. Deduction towards payments made to pension scheme of central government. Limit of 50,000 rupees. Section 80E. Interest on education loan. Allows deduction in respect of payment of interest on loan taken from any financial institution or any approved charitable institution for his higher education or for the purpose of higher education of his spouse or his children. Limit total amount paid towards interest on loan taken. The following documents to be submitted. Admission received from concerned educational institution. Loan sanction letter. Provisional statement EMI chart for interest. Only interest part is eligible to claim. Form 12BB. Section 80D. Deduction towards payments made to health insurance premium and preventive health checkup. Medical insurance premium paid receipts is to be paid as documentary proof. The following expenses are allowed as deduction under Section 80D. Health insurance premiums paid in any mode other than cash. Up to 25,000 rupees paid for self, spouse, dependent children or parents. Up to 50,000 rupees if family or your parents are senior citizens. Medical expenses incurred for senior citizens. Preventive health checkups. Cash payment allowed up to 5,000 rupees for self, spouse, dependent children or parents. The government introduced preventive health checkup deduction in 2013-14 to encourage citizens to be more proactive towards health. Preventive health checkups aim to identify any illness and mitigate risk factors at an early stage through frequent health checkups. The table below captures the amount of deduction available to an individual taxpayer under various scenarios. Section 80DD. Deduction in respect of maintenance including medical treatment of a dependent who is a person with disability. Limit. 40% to 79%, 75,000 rupees. For severe disability 80% and above, 1,25,000 rupees. The following documents to be submitted. A copy of certificate issued by the medical authority. Other than service hospital, the certificate needs to be supported with Form 10I issued by service hospital. US80DDB. Deduction towards payments made towards medical treatment of self or dependent for specified diseases. Limit. Actual amount paid or 40,000 rupees whichever is less. Further, In case of the person against whom such claim is made is a senior citizen, 68 years or more, then the deduction up to Rs 1 lakh is allowed. The following documents are to be submitted. A copy of certificate issued by the medical authority. Other than service hospital, the certificate needs to be supported with Form 10I issued by service hospital. Receipt of expenditure actually incurred. Section 80U. Deduction in respect of a person with disability. Limit 75,000.00. For severe disability, 80% and above, 1,25,000 rupees. Document. A copy of certificate issued by the medical authority in Form 10I needs to be submitted as proof. Thanks for watching the video. Now you can select your tax slab on your own. Kindly subscribe and share our channel.